Oil prices are exploding, global markets are shaking, and the world is once again staring at one narrow strip of water in the Middle East. The Strait of Hormuz. This tiny shipping lane controls a massive portion of the world's energy supply. And right now, conflict involving Iran, the United States, Israel, and regional powers has pushed the global oil market to the brink. So how did we get here? Who are the major players? Why does this one waterway matter so much? And more importantly for investors, how could this conflict affect the stock market and how can people potentially profit from it? Let's break it down. Chapter 1. How we got here. To understand today's oil shock, we need to rewind a bit. For years, tensions between Iran, Israel, and the United States have been simmering over several issues: Iran's nuclear program, regional influence in the Middle East, and proxy conflicts in countries like Lebanon, Syria, and Yemen. Earlier this year, those tensions exploded into direct military confrontation. Airstrikes hit Iranian military targets. Iran responded with missile and drone attacks, and shipping traffic in the Persian Gulf became extremely dangerous. The conflict quickly escalated into something far bigger than a regional dispute. It turned into an energy crisis. Chapter 2. Why oil prices are surging. When geopolitical conflict threatens oil supply, markets react instantly. That's because oil is the lifeblood of the global economy. Transportation, manufacturing, shipping, agriculture. Nearly everything depends on energy. As this war escalated, global oil prices surged above $100 per barrel, the highest levels in years. But the price spike isn't just about war. It's about geography. Chapter 3. The Strait of Hormuz, the world's energy choke point. The Strait of Hormuz is a narrow channel between Iran and Oman. At its narrowest point, it's only about 21 miles wide. But what passes through it every day is staggering. Around 20 million barrels of oil move through this passage daily, roughly 20% of global supply. Think about that for a moment. 1/5 of the planet's oil passing through a tiny maritime bottleneck. That's why it's often called the most important energy choke point in the world. If ships can't safely pass through this strait, oil exports from several major producers suddenly get trapped. Chapter 4. Who are the main players? Several major powers are involved in this crisis. Iran controls the northern side of the Strait of Hormuz. By threatening to block shipping, Iran gains enormous leverage over global energy markets. Their strategy is simple: if the world pressures Iran militarily or economically, Iran can pressure the world through oil prices. The United States wants to ensure freedom of navigation through the strait. If the passage closes, global oil markets panic and allies across Europe and Asia suffer. Israel views Iran as its largest regional security threat. Many Israeli strikes target Iranian military infrastructure and missile capabilities. And the Gulf oil producers, countries like Saudi Arabia, the UAE, Kuwait, and Iraq all depend on this route to export oil. If the strait closes, much of their oil cannot reach global markets. And that's exactly why the stakes are so high. Chapter 5. The global impact. When oil prices spike, the effects ripple through the entire global economy. Higher oil means higher gasoline prices, higher shipping costs, and higher food prices. Economists warn that prolonged disruptions could slow global economic growth and push inflation higher worldwide. Some countries are already feeling the shock. Fuel shortages, rationing, and economic pressure are spreading in energy-dependent nations. Energy is the foundation of modern civilization. When oil supply is threatened, the whole system trembles. Chapter 6. How this affects the stock market. Geopolitical conflicts usually create winners and losers in the stock market. Historically, when oil prices surge, energy companies benefit while transportation companies struggle. Here's why. Oil producers make more profit per barrel. But airlines, trucking companies, and shipping firms suddenly face higher fuel costs. That squeezes their margins. So during energy crises, money often rotates into energy stocks. Chapter 7. Investment opportunities. Investors who understand geopolitics sometimes position themselves ahead of these shifts. Here are several sectors that historically benefit from rising oil prices. Oil producers. Companies that pump oil out of the ground often benefit the most. Higher prices mean higher revenue. Energy ETFs. Energy-focused ETFs allow investors to gain exposure to oil producers and refiners. Oil futures and commodities. Advanced investors sometimes trade crude oil directly. But these markets are extremely volatile. Defense companies. War often drives higher military spending. Defense contractors can benefit from rising geopolitical tension. Shipping and LNG infrastructure. Energy transportation companies may benefit from the rerouting of global supply chains. Chapter 8. Risks and reality. Now here's the important reality. Markets don't move in straight lines. War can push oil prices higher. But if diplomacy suddenly reduces tensions, oil prices can crash just as quickly. Energy investing during geopolitical conflict can be profitable. But it's also extremely volatile. And timing matters. Chapter 9. How this might play out. There are a few possible scenarios for how this conflict evolves. Scenario 1, de-escalation. Diplomatic negotiations reopen the Strait of Hormuz. Oil prices stabilize. Markets calm down. Scenario 2, prolonged conflict. Shipping disruptions continue. Oil remains above $100. Energy companies outperform. Scenario 3, full regional escalation. Major Middle Eastern producers become involved. Oil prices could spike dramatically, some analysts even speculate prices could approach $150 or higher. The future is uncertain. But one thing is clear. Energy security is once again at the center of global geopolitics. Closing. The Strait of Hormuz is only a few miles wide. But right now, it's holding the weight of the global economy. A single choke point, carrying 1/5 of the world's oil, sitting at the center of one of the most dangerous geopolitical conflicts of our time. And when energy markets move, the entire financial system moves with them. Smart investors pay attention. Because geopolitics often creates the biggest opportunities in markets. If you found this valuable, make sure to like this video and subscribe for more breakdowns on how global events affect your money and the stock market.